Hey guys, it's Rashad and welcome back to my channel. And lately, with everything going on in the world, I realized how commonplace investing is starting to become. And I mean, why wouldn't it? With so many people being stuck at home and thousands of businesses permanently out of business because of the pandemic, there are a lot of people looking for new ways to make money. And with all the headlines being what they are, it's hard not to be curious or at least wonder what investing really is. So if you're new to the channel and you're interested in real estate, investing, wealth building, and increasing your financial literacy, make sure you subscribe and give this video a like because it helps out the channel a lot by boosting the YouTube algorithm. In this video, we'll be talking about 4 simple things that all beginner investors need to understand before they start their investment journey, as well as I'll be giving you 5 stocks that are valued currently under $100 that are perfect for any portfolio, whether you're new or an experienced investor. So make sure you watch this video through to the end so that you understand all of these steps to make sure that you're protecting your money, because investing comes with risk and you're not guaranteed to make any money. Because for most people, investing is really confusing because we were never taught how to do so. So we don't really understand what's going on, and when we actually try to learn, it seems like everybody's trying to sell us something or just seems really scammy. And then it seems like all of the companies that you would want to buy are really overpriced, and it doesn't seem like you'd ever have enough money to actually purchase a share of it. And then it seems like whichever way you look, everybody always has something different to say about what you should buy and how you should invest, and it just seems like you don't know which way to turn. So today I'll be sharing 4 easy steps for anyone to begin their investment journey with just $100 or less. So the first thing that you want to do when you start investing is to decide what broker you want to go with. And there are a lot of brokers out there, and it's a lot easier to choose nowadays because investing on a lot of platforms is free. So you really have to decide what investment style and strategy you plan to go with. And a stockbroker is essentially a person who executes the trades for you on your behalf. And if you've ever seen the movie Wolf on Wall Street, that's essentially what it looks like.
I mean, minus the criminal activity.
So not all brokers are built equally. A lot of them offer some of the same major stocks, but when it actually gets down to things like REITs, index funds, or mutual funds, a lot of them have different packages. So these are different types of things that you can look into. So as a beginner investor, you actually have no idea what you're looking for when you're comparing brokerages. And I'll definitely make a video comparing the different ones to help you understand more about what you're looking for and how to better choose the broker that will best fit your strategy and your investment style. No matter what your investment style is or your strategies, one of the top 3 brokers that I will always suggest to anyone is Vanguard, Charles Schwab, and Fidelity. The reason that I would suggest these 3 for anyone is because they offer IRA functions, which I'm not going to get deep into detail about what an IRA is, but essentially it just stands for an individual retirement account. And it does exactly what it says. It's an account that you invest in for retirement. And if you don't know anything else about an IRA, just understand that this account is tax deductible. So you can invest up to $6,000 a year into this account and deduct it on your taxes. So make sure you subscribe to this channel because I'll definitely be going into detail explaining what an IRA is and how to properly use it to maximize your tax deductions and to help you become a tax-free millionaire when you're ready to retire. And for the beginner investors who aren't really worried about retirement because they don't really understand investing all that well, there are 3 popular apps that you can utilize that I would recommend, and those are Robinhood, Webull, and M1 Finance. I'll briefly explain the differences between all 3 of these apps, and I'll drop a link in the description below so that you can download any of these apps, and 2 of them also offer free stocks when you first sign up. One of the most popular apps that any new investor is probably going to hear about is an app called Robinhood. Now, the reason this app gained so much traction is simply because they were the very first brokerage to offer free trading. Now, most platforms offer free trading, but Robinhood is still one of the more popular options because they offer free stocks every time you refer a friend to use the app. Next, you have Webull. Now, Webull is also a free trading app that has a lot of different functions. And the reason that this app is also good for new investors is because when you first deposit $100 on the platform, they'll give you a stock valued up to $1,600 as your very first free stock. Now, the next one is M1 Finance. Now, this one is really popular because of its robo-advisory automated investment feature. This feature is something similar that a lot of people may recognize from apps like Acorn or Stash. Now, the reason that this one's a little bit better than Acorn and Stash is because it doesn't charge you monthly fees. You also have the ability to manually invest into your portfolio. And if you just need a quick pro tip, I would suggest that you download all 3 of these apps and kind of play around with them. First and foremost, if you're going to start investing with just $100, you putting the $100 in Webull will give you a free stock. Opening the Robinhood account will give you a free stock. And you'll start your investment career off with 2 free stocks and $100 worth of buying power. And after you have your 2 free stocks, and while you're trying to decide which app you're going to use, the next thing that you need to do is to create a watch list. Now, most brokerages create watch lists for you, but they really put like the top 20 companies on there that most of us can't afford when we start investing anyway. So usually when you create one of these accounts, you'll see stocks like Amazon, Google, Netflix, Facebook, and sometimes Tesla. Now, of course, once you create these accounts and you see how much these stocks are valued, you're going to think that you can't afford anything. Now, once again, this is why at the end of this video, I'll be giving you 5 stocks that are currently valued under $100 to help you start your investment career. And the easiest way to find stocks that aren't highly valued is really just to think about different things that you use on a day-to-day basis. Of course, we all know the big ticket item companies. So when it comes time to creating your watch list, just actually take some time and think about 20 companies that you use on a day-to-day basis. Whether that's gas, fast food, some store that you enjoy in the mall. 9 times out of 10, it's being traded on the stock market. And once you start watching stocks in certain sectors, you start to find new stocks that you'll understand are very viable for your portfolio to actually help you grow in the long term. Which brings me to the third, if not the most important part of this, and it's always to do your own research. The number one killer for brand new investors is something called FOMO, which is the failure of missing out. Because oftentimes we hear about our buddy or someone who made a lot of money investing in a certain stock, and now we just feel like we need to go buy it before we miss out. Well, that can't be further from the truth, because in reality, if it's such a great company, no matter when you buy it, over time, you will still see a valuable return on your investment. Oftentimes, you'll be swayed by a lot of people trying to tell you what to buy or what to focus on. And if you don't understand what you're purchasing, as the market starts to fluctuate, you'll get very nervous and you might actually lose money by trying to sell off stocks because you see it hit a dip when you didn't actually know why the stock was growing in the first place. Doing your own research is so vital because there's a simple fact that stocks are known to go up and down. Also, a part of doing your research segues heavily into the point, which is make sure that you're investing for the long term. And the reason that this is so important is because doing your research and investing for the long term is making sure that you're buying stocks that you believe will be around, well, in the long term. The facts are simple. Investing really is a wealth builder, meaning it takes time. This isn't some get-rich-quick scheme. And if anyone tries to tell you that, they're trying to sell you something or they're lying to you. Investing takes time. In addition, if you sell any of these stocks before a year is over, you have to pay capital gains on it, which is kind of counterproductive because ultimately speaking, you didn't really profit as much as you think you did. And that's why it's important while you're doing your research to look into things like IRAs or look to see if your employee has an employer match program with your 401k. There are numerous options and different types of accounts out there, and you want to make sure that you understand what you're doing so that way you can make sure that you're protecting your money and protecting your investments. And if your goal is to accumulate wealth and develop passive income from investing, then make sure that you're looking into stocks that pay you dividends. And a dividend is essentially just a payout that a company gives its shareholders as a cut from the profit that that company made during that quarter. Also, while you're doing your research and you're considering investing for the long term, make sure you're paying attention to something called the 4% rule. Now, this rule doesn't apply for everyone, but it's actually a great start when you're actually deciding what you want to create your investment strategy to be and while you're building your portfolio. The 4% rule essentially just says that you're growing your portfolio to a point where when the time that you're ready to retire, you can live off 4% of the total amount of what's inside of your portfolio each year. And that may sound very confusing, so I'll definitely simplify that for you guys in a later video. And the fourth and final thing to make sure that you're always considering is never to time the market and just be consistent. No matter what your strategy is, as long as you're consistent about your investment, you'll always come out on top. The people who say that they're trying to wait for the bottom of a market or the price is too high, they're just going to wait to invest, they're actually missing out. So take into consideration what just happened. In February of 2020, the market plummeted and it started to hit all-time lows. Well, there were a group of people who were like, oh, the market is just dropping, I'm just gonna wait to the bottom and then I'll buy in. Well, most of those people actually missed some of the best trading days because by the time that they decided to buy back in, it was already too late. And then you run into those same people who decide, oh, well, there's probably going to be another crash. I'll just wait for that. Well, if you've been paying attention to the market, if you would have bought any stock during that time, you definitely came out on top. Or take into consideration what happened before the year 2020. We were actually in one of the longest bull markets, which means the market was on a steady incline in history. So no matter who you are, whether the market is going up or down, the best strategy is essentially just to invest no matter what the price is. And if you can't really afford too much, then you can buy something like a low-cost index fund or a mutual fund. Just look into a S&P 500 index fund. If you can't decide what stock to buy, just put a little bit of money there and it just mirrors the stock market. And over the course of 100 years, the stock market has always gone up. Yes, there may be a couple crashes here and there, but it always rebounds. And those are the 4 basic tips to help any new investor. And as promised, here are 5 stocks that are currently valued under $100 during the time of me making this video. The very first stock on this list is one of the world's smartest investors, Warren Buffett's favorite, and that would be none other than Coca-Cola. This is a type of stock that many people put into their portfolio because it's something referred to as a defensive stock. These defensive type companies are companies that people utilize in their portfolios to basically hedge against inflation and the rise and fall of the market. At the time of recording this video, Coca-Cola is currently valued at $48.69. And the next stock on this list is an electric car company that a lot of people compare to our very own Tesla. And that company is NIO. And at the time of recording this video, this stock is currently valued at $56.18. So the third stock on this list is a company that creates semiconductors, which is a piece inside of your phone that gives you the 3G, 4G, 5G, or whatever G that you have when you're watching this video. And this company is Marvell. This company is currently valued at $51.10. The fourth company on this list is a rideshare company that is very popular, and it's none other than Uber. And if you don't know what Uber is, it's a company that allows people to basically call in rides when they need to get somewhere. Let's say you're out of town or you just don't have a car, you can order someone to come get you. It's like a taxi service. This company also offers the ability to have your food delivered to you. The current price of Uber at the time of recording this video is $55.50. The fifth and final stock on this list of stocks valued under $100 is a company called Realty Income. As a real estate agent who spends all of his time looking at houses and understanding the ins and outs of the value of property ownership, this is an amazing company for those who want to invest into real estate and can't afford to actually purchase a physical property. Realty Income is a company that's referred to as a REIT, or a real estate investment trust. And the reason I recommend this company, other than the fact that it's valued under $100, is simply because it offers monthly dividends to its shareholders. And at the time of recording this video, the company is currently valued at $57.68. And I'm not telling you that you should invest in any of these individual companies. I'm recommending that you add them to your watch list and maybe look into them. And remember, always do your research and don't just listen to some random guy on YouTube. If you think that you have a good company that's currently valued over $100, drop it in the comment section below because it can definitely help somebody else out. And remember, always do your own research. Just because someone tells you that a company is really good, make sure that you understand why they feel like that. And thank you for watching this video. Make sure you click the links in the description to start your investment journey and collect your free stocks, and subscribe to the channel if you haven't already. And don't forget to give this video a like, and if you found this information helpful, make sure you share this video with at least one friend. And make sure that they subscribe to the channel so they don't miss any of the helpful videos that we post here when we come back to help you manage your money.